here in the euro dollar. And after the non-farm payroll, the US dollar gained across the board. Okay. One more time, mic check, mic check. Okay, so after the non-farm payroll, this is where we saw that big candle, big bearish candle accelerate downwards, and price is now just holding above 1.25. Today, we saw a little bit of stalling here and a little bit of bullish correction, but I would suspect that there will be sellers on the rally, right? The euro dollar continues to be bearish when we look at the 4-hour chart, right? When we look at the daily chart, it's a bearish market, and we shouldn't try to pick a bottom here. It's going to be like trying to catch a falling knife. Maybe if after a week of data we start seeing a price bottom, maybe then we can start buying on dips. But for now, I think the market will continue to sell on rallies. Okay, let's actually go all the way to the weekly chart just to get a bigger perspective and how much room we think the euro dollar can continue to fall. We just broke below some key support pivots here. Okay, around 1.27, 1.28, down to 1.2650, all broken. So the market right now is in this sort of free fall runaway train. Again, you need to have at least a week of good price bottom action before looking at a possible bullish correction. We have not had any significant or meaningful consolidation so far, so let's not jump to that contrarian view just yet. Okay, I know the market looks a little oversold at the moment, but there's room to fall. Okay, if we look at the 2012 low, we might not expect this in the short term. We might expect some consolidation before falling towards 1.2042, but this is a viable target. Okay, in the long term. In the short term, we might sell some rallies, but not expect to fall to 1.2042 just yet. Okay, if we look at a Fibonacci retracement of this 2012 to 2014 rally, we can see that the next key Fibonacci retracement level of 78.6% is at 1.2460. So in the short term, when we look at this rally, we could anticipate selling towards at least 1.2460. So that would be a short-term target. You also see some pivots here coming down. There's a some support resistant pivot in this area above 1.24. So 1.24, 1.2460 area, we can maybe expect some support. Okay, so going back now to the 4-hour chart, maybe even to the we'll stick with the 4-hour chart. So we have this correction here, and as it approaches 1.26, we should start looking for sellers. Okay, we have some previous support pivots here. Okay, around 1.26, that's where we should start looking for sellers. We might have a little bit of some extra follow through. That would be a target number 2 here, 1.27. Now this level, 1.27, will be very important. If the market is to show a price bottom, we need to see a break above 1.27, at which point we might consider buying on a dip. But again, before a break above 1.27, we can consider selling around 1.26. If that doesn't work, we can try again just under 1.27. Again, our target we saw in the weekly chart is down to 1.2460 or down to 1.24. Okay, so that's the euro dollar. Not much more to go on to talk about than that. It's bearish. Look for sellers on the rally. Really, this is going to be the theme across across different US dollar crosses to continue buying the US dollar. Okay. Here is the dollar yen in the 4-hour chart, and we saw resistance here at the 110 level. Okay, so that's a psychological resistance and actual resistance that we saw last week. Price fell relatively sharply. You know, when you look at the rally since May, really, or June, you can say, we haven't really had much, any very significant consolidations. Here we had about 100 pips, 150 pips. Here we had less than 100. And here we had probably the strongest one, 200 pips from 110 down to 108. But we had a very sharp correction. You see, when this dip occurred, it broke below this previous low here, and that showed a possible topping. It showed that the market was able to make a lower low. It's been making higher lows and higher highs, and here we have a lower low. But oftentimes, price action like this can be what's called a clear out. So it clears out the previous support factors, and if it's not able to maintain that bearish structure, then we could translate this into a bullish outlook. It's basically showing the weakness of a bearish attempt. Okay, and the presence or the dominance of the bulls in this market. Okay, now we have a failure to break above 110, so we know that 110 is indeed a strong resistance. And knowing that, if we do see a break above 110, we can expect quite a strong bullish continuation as well. Okay. Now let's look at the higher time frame, maybe the weekly chart. Okay, yeah, the weekly chart would do. So in the short term, maybe we can expect a little more room to rally towards the 100-point, 65 to 70 area. This 2008 high here. Okay. But again, this is a bullish market, as we see in the weekly chart, and there's really no reason to believe there's topping just yet. Okay, we don't have any. I would say, just like in the euro dollar, I would need at least a week of price action to show me a possible top, and so far we haven't had that. So this week, hey, it could happen that this week becomes a week of price topping, but when we look at the prevailing trend, it's better off, I would prefer to look at the bullish scenario instead. So once again, now let's go back to the 1-hour chart, because this market here, you saw it retreat during the U.S., the Japanese and European session, but when we got into the U.S. session, we found support. And in the 1-hour chart, it does look like a very clear bullish trend developing. Okay, we had this 108 to 109.90 rally. Half of it was induced by the FOMC. I mean, not the FOMC. I'm sorry, the non-farm payroll data on Friday. And now we have a retreat. And this retreat right now is testing the cluster of 200, 150 hour simple moving averages, which so far acted as support. So far we are seeing buyers on this dip and a possible bullish continuation. Another thing is the RSI, the one hour RSI held above 40 after breaking above 70. So the break above 70 showed bullish momentum, or at least the start of bullish momentum in the 1-hour chart. Then if the RSI here holds above 40 and comes back up, then we have bullish continuation momentum in this time frame, and in that scenario we should be expecting a test, or an attempt to break above 110. Okay, so that's the next phase in this rally, I believe. Now, even if we don't get that early in the U.S. session, let's say price continues to meander sideways or even fall a little bit, we can see some more support factors, right? Around 109. So I would say down to 108.85. This area is going to be a key support area. Again, the RSI shouldn't fall below 40, and if it does, it should come right back up if the market is indeed bullish. Now, if this decline here extends below 108.70, we basically come back to the levels before the non-farm payroll, and that would reflect a failure of a really strong U.S. data to continue pushing the U.S. dollar, Japanese yen higher, and that would suggest maybe the dollar yen is exhausted. Maybe it is indeed in due for a consolidation or a correction. Okay, but above 108.80, I would like to see the price action hold above 109 to be confident of the bullish outlook. But again, if it gets into this area just under 109, look for support. I mean, it comes back above 109, then I would still maintain that bullish outlook. But if price does break below 108.70, I would start considering possibly that price action this week. I would stay away from the dollar yen this week and see what happens to whether or not the market will indeed create a price top. And if it does create a price top, it should fall below 108. Okay, that would create a price top, and then we can be looking at at that point we can maybe consider selling on a rally. Okay, but right now this market is bullish. Therefore, we should be looking to buy on the dip. But if the dip extends below 108.70, we should probably stay away from this pair because it could be topping, but there's such a strong prevailing bullish trend. It's caught at the cross currents. It's a crapshoot either way if that happens. But for now, we can maintain some bullish preference, some bullish bias based on the prevailing trend, based on Friday's strong non-farm payroll data, and the momentum. It's still bullish. So that's the dollar yen. Okay, let's move on to the next pair here on the pound dollar. The pound dollar, I was a bit skeptical. I was a bit. I looked at this as a resilient market here, but of course this rally from 1.6050 to 1.65 area, this volatility surrounded the uncertainty around the Scottish independence vote. Okay, so there was that volatility here. Okay, now that it's over, things kind of return to the U.S. dollar story. And the pound, well, the Bank of England, it kind of, in July and June actually, it kept, Mark Carney kept saying, we might raise rates at the end of the year. How come nobody is pricing that in? Well, the market immediately priced that in, but immediately after that, it retreated from the 1.7191 high here. And it's been a very sharp decline except for this volatility surrounding the Scottish independence vote. So now the Bank of England seems to be back, pushing back that timeline, the rate hike timeline for, it was possibly going to be late 2014. It's pushed to early 2015, and that's not a fix right now. We might keep pushing back that rate hike in the UK. Data has been kind of soft in the UK. And the sort of economic decline in Europe is affecting the UK as well. So we have the pound dollar, we have the Bank of England and FOMC kind of going different ways in terms of when they would raise rates. The FOMC scheduled or projected to be mid-2015, might even move it ahead earlier than mid-2015, especially with strong jobs data like we saw on Friday. Okay, if we get some wage inflation, that's gonna really, I think that's gonna be the next key indication or key factor that would push forward or pull pull forward the timeline for the rate hike for FOMC. Inflation. We might have general inflation, but we need to see some wage inflation, I think, before the FOMC is comfortable with raising rates. Okay, so again, in any case, there's a divergence. So my theory that the pound dollar could be resilient here, it was wrong, and the pound dollar kept falling into new lows on the year. It broke below some key levels. It broke below this 1.6050, and it also broke below a key level in the weekly chart. Broke below the 200-week moving average. Also broke below 50% retracement. Okay, just give me a minute here. Here we go. So it broke below 200-week moving average and the 50% retracement level here at 1.60. All right. So that's a key. And last week's bearish price action screams bearish continuation to me. We had these candles here, very tentative candles, showing the market was not certain of the direction. And then this was a very strong bearish candle, showing the market has decided to continue the downtrend. Now, in the short term, we might start to expect some support here as the market approaches some support pivots. Let's say, okay, around 1.5850. That could be the next support pivot. 1.5850, 1.59, right? You see these this consolidation low, this September to December 2013 consolidation had lows around 1.5850, 1.59. So that could be the next support area in the short term, and we can anticipate consolidation there as the RSI in the weekly chart is in oversold condition. In the daily chart, it's also in oversold condition below 30. So, maybe we can expect some support soon. But in the short term, if we do see a rally this week or early this week, we should expect to see some sellers as well, at least to attempt to fall towards this 1.59 area, 1.5850 area. All right, so again, same theme, continue dollar strength, buy the dollar on a dip, or in this case, sell the pound dollar on a rally. And in this 4-hour chart, we can see, we can put in some key levels here to look at, to anticipate a sell. So our first level could be this 1.6050 level, previous resistance. Okay, that could we can have some near-term selling there, but if this little price bottom continues, holds on this week, we can look at some further rally, and I would rather wait for a little further, a little further towards at least the 1.61, 1.6150 area, where we will be closer to this support resistance pivot and also this falling trend line. Okay, so I think 1.6150 could be an area to consider selling on a rally. Okay, especially if this RSI in the 4-hour chart comes up into the 50 to 60 area. Okay, from that point, the downside, we're looking back at 1.59, 1.5850. Now, if the market rallies above 1.62, it's not completely, it's still bearish, but we could be entering some consolidation. Okay, I wouldn't, at that point, I would stay away from the market and watch the price action, see if the market is trying to build a price bottom or whether we can still sell this market. Okay. All right, so that's the pound dollar. I'm looking for 1.6150 area again to short. Okay, let's move on to some commodity currencies. condos. Okay, so we probably just got, hang on a second. We probably got I know we did get the Canadian IV PMI data. So it's a survey of businesses in Canada. And I just want to pull the number right now because it came in at 10. And it looks like it's a Canadian dollar positive release. Okay, it is. Okay, let's take a look here. Here's the calendar at the bottom of FX Street. Let me just make that a little bigger. So here we see the IV purchasing, the PMI here, 58.6, much higher than the 50.9 in August. So this number is for September, and much higher than the forecast around 53. 58.6, I think. Let me see something. Oh, let me see some more data. There we go. So I think 58.6 might be a 2014 high, if I'm not mistaken. Yes, it is the highest since October 2013. So this is showing, businesses are confident, are seeing better numbers in September. Okay, so we can give the Canadian dollar, at least some short-term, expect at least some short-term strength from the Canadian dollar. All right, so with that in mind, now just keep in mind this isn't anything that should be a game changer in the medium term or in the long term, but it should give the Canadian dollar a boost in the short term, and if we look at the US dollar Canadian dollar chart, we are seeing the Canadian dollar gaining, but this is against a prevailing trend, right? The prevailing trend is dollar strength against the Canadian dollar. So this could potentially set up for a buy on the dip. Okay. Now before we consider that, let me just show you guys the daily chart where we see price coming up at the 2014 high here at 1.1278. So maybe we are going to see some consolidation below this 2014 high, although the price action leading to this high has so far been indicative of bullish continuation. Okay, we had this long tail to the bottom, followed by a very strong bullish candle here on Friday, and that shows you, failure of the bearish attempt, and then bulls taking over. Okay, today we have a bearish reaction to fundamental data, to economic data, but I would suspect that there will be buyers on this dip. Okay, so let's go back to the 4-hour chart. Where will we consider buyers on this dip? Well, I think we can look at some local support resistance pivots. Okay, here is one here at 1.1130 to 1.1140 area. Okay, we can probably project a trend line from last week, or not last week, but maybe 2 weeks ago, the low from 2 weeks ago, and project it to reinforce this support factor around 1.1130, 35. And also if the RSI comes back down to 40 in this 4-hour chart, we should expect some support. So if the RSI comes back to 40 and price comes down to 1.1130 and we do see support, we do see the market starting to go flat in the 1-hour chart or even the 15-minute chart, okay, which is sharp right now. So when we start seeing some support there, we can start considering buying on the dip. But for now, let's just wait, because this price action seems to be, this reaction seems to be strong, at least in the short term. All right, so dollar loonie, waiting for this dip, and waiting for some signs of support before buying on the dip. And the bullish outlook would be back to that 2014 high, or maybe even the current or last week's high around 1.1270. Okay. I think if we have a position, we should start scaling out here, but but considering the prevailing bullish trend, maybe we can leave a partial position as a runner to see if it can break above 1.1280, the 2014 high. All right, so that is the loonie. Now let's take another look at another condom, the Aussie dollar, US dollar pair. Now I'm noticing that the dollar Canadian dollar pair is at its 2014 high. The Aussie US dollar pair is at its 2014 low. It actually cracked that 2014 low. We have fresh lows on the year in the Aussie dollar. Not barely, but we do have that crack. And again, just like the dollar Canadian dollar, we have strong bearish candle here, strong candle here on Friday that suggests the continuation of the prevailing trend. Now, let's see, when we look at the 1 hour chart, I see Aussie dollar near the place where I want to sell it, sell on a rally. Okay, so we have a little bit price bottom to start the week, a little bit of bullish correction, and now we're in this cluster of key resistance levels, factors. We have the 200, 150 hour moving average, and I would say we have some support resistance pivots going all the way up to 87.67, 87.70. So we're at 87.40 right now. I think this whole area is a possible sell on the dip area. We saw a little bit of reaction at the very beginning of the U.S. session, okay, but the market's not done. All right, but I think it's going to lose its breath, especially with no strong data against the U.S. So in the short term, we should respect some of these technical levels and look to sell around 0.86, 87.60 to 70 area. Okay. All right, so that's the Aussie dollar. Here's a look at Kiwi dollar. Very similar situation. Let's go to the daily chart. Now, in the daily chart, we broke below the 2014 lows. Okay, so it's similar, but the Kiwi dollar seems to be in a more advanced bearish mode than the Aussie dollar. Now, it's coming up close to the 2013 lows, though I think we do have some room to fall. Okay. Now, before we consider buying around here, I think maybe you can put in a very small position here, give it some room to breathe. You want to give it, because you want to give it some room to breathe. You're going to need to have a small position, especially against a falling trend. So if you're going to try to buy this bottom, I'm not saying you should. I would go against it because it's a very sharp trend, a very sharp decline, and last Friday's bearish candle suggests bearish continuation. So I would prefer continuing to sell on the rally. But if price does get down towards 0.78, 76.90 area, 0.77 area, we can start at least scaling out our positions, if not putting in very small positions. And I would only do this as sort of a hedge against other pairs where I'm buying the US dollar. Okay, now, Kiwi dollar at a key level, oversold. Maybe we can consider buying this as a hedge If we're going to sell the euro dollar, sell the pound dollar, we might buy the Kiwi dollar here. Again, only if it's at a very low level, price level is down to 0.77 and the RSI here in the daily chart is back below 30. Okay, then we can consider buying on that. Only if we already have positions selling the euro dollar and selling the pound dollar after they rallied. So that would be, I wouldn't want to buy the Kiwi dollar just off of this bottom because the US dollar is just too strong at the moment. And the COM dolls, we have a sliding commodity in gold. Let's take a look at gold. Gold just broke the 2013 and 14 low here. Actually, I'm sorry, it didn't break it yet. It's about to. It almost did. So it's approaching the 2013-2014 low, about to break them. If we look at the weekly chart, we can see that there's a prevailing downtrend here. We have a consolidation that's developed for more than a year now. So if we break this year-long consolidation, a year and a half almost, then we can be looking at the 2010 low here, which is around 1045 area. Okay, if we look at silver, it's already in that mode. It's already heading towards that 2010 low, which is at around 14.63. So it broke this year-long consolidation, and it's continuing the prevailing downtrend. So gold might follow the same route. So with all these commodities, precious metals, commodities, you also see oil prices falling. So all these commodity prices falling will pressure the Aussie dollar, pressure the Kiwi dollar as well. Okay. So once again, why pick the Kiwi dollar? It's a little more oversold than the Aussie dollar. It's near the 2013 lows. If we're gonna use a hedge, maybe use the Kiwi dollar. Okay, look for this possible double bottom to form. All right. Okay, I think I went over most of the pairs that I wanted to look at. There might be some Japanese yen pairs that are interesting. The pound yen, for example. Okay, so in the 4-hour chart, when we go back to September, we had this very sharp rally. And if we're going to put this in perspective, let's go to the daily chart. Okay, so the daily chart gives us a better perspective on the pound yen, which has been consolidating throughout the year. Even in this consolidation, however, we see a bit of a bullish bias with price trying to hold above the 150-day moving average. Here we did cross under it, and then this was a very tentative moment. It kind of initiated a bearish signal when price fell below the 200-day simple moving average. Okay, but right after that, this bearish signal was invalidated when price came back above the cluster of moving averages. So you see, this is another case of a clear out. When you see a prevailing uptrend, then you see a clear out, which is a strong bearish attempt that at the end of it shows you that bears gave up. Then you have bulls take over. Then this translates to a bullish continuation signal. A failed bearish signal can be translated into a bullish continuation signal. Okay, and in this case, when price crossed back above the moving averages, here we had another attempt, and we had confirmation. We have a breakout of this consolidation, 2014 consolidation. So the September price action itself was a false bearish signal translated into a bullish continuation signal. Okay, and you see this, this trend goes back to at least 2011. Let's go to the weekly chart. Yeah, so 2011, 2012, we had this bottom. The trend has since turned bullish. Okay, so we could be heading back towards this area here, this steep fall here, surrounding the financial crisis we had in 2008 that started really 2007 and kind of hit the exclamation point in 2008. So here we could be looking at this 182 to 184 area as the next target. Okay, so that's a long-term outlook. Now going back to the 4-hour chart, let's make a Fibonacci retracement of this September rally. Okay, and just look at the 38.2, 50, and 61.8%. Okay, so right now we're right around the 50% area. And I like this area as a support area because, first of all, in the 4-hour chart, the 200 period simple moving average is holding as support. That shows that the support factors. It shows buyers in the market. Bulls are still around. This market is not in reversal yet. We have this ABC correction. Okay, so we could have had, this could be a completed correction cycle. In the 4-hour chart, the RSI is oversold. It was oversold, and it could be oversold again. Now this shows you we lost momentum in the 4-hour chart, but in the daily chart, we can see that the RSI is still above 40. If this comes back down to 40, we can again consider buyers. It doesn't have to come down to 40. Okay. Also, price. You see, if price comes down to these simple moving averages around 173 to 173.60 area, that's another area to consider buying. Okay. But for now, let's look at the 4-hour chart. Now, if price falls below this current low here at 174.30, we should continue to expect some bearish correction, into that 173, 173.60 area, which at that point would be testing the 61.8% retracement level. Okay, so around that area, that's the next area we can consider to buy. Now, what if the market has is already starting the bullish continuation here at 174.30? Okay, if that's the case, going to our 1-hour chart, if that's the case, it hasn't shown it yet. But if that is the case, what we have to see is at least a break above this current consolidation here. Oops. And we have to see the 1-hour RSI break above 60 and tag 70. Okay, that would start or initiate the outlook for bullish continuation. Otherwise, even in this 1-hour chart, this market is still bearish. Okay, you see the RSI here, hold below 60 for the most part, tag below 30 here, again hold below 60. So the RSI, the RSI continues to show bearish momentum. Price is still below the 50-hour simple moving average. So we have to at least see some evidence of a price bottom in the 1-hour chart before considering the bullish correction scenario that we were talking about in the 4-hour and daily chart. Okay. Okay, so Boyke, your question, what is our RSI setting? It's the conventional 14. And on default it just shows you the 50 level, but we have maybe you don't see it, but I see the grid lines here. It's kind of soft. It's very light, very very gray. Maybe you guys don't see it, but that's why I didn't feel like I need to add the 60 and 40 and the 30 and the 70 area. Okay, but so but Boyke, I use the 60 and 40 a lot. 60, if the market is bearish, the RSI should hold below 60 in that time frame. So in this 1 hour chart, it's bearish. The RSI should hold below 60. So if the RSI breaks above 60, that means it's lost its bearish momentum. If it tags 70, for me, that means it's initiating a bullish correction, bullish momentum. Now, in the very near term, when the RSI is above 70, we can consider that overbought. But once that's resolved, once the RSI comes back below 70, the market is bullish. Okay, so the overbought, oversold signals from the RSI are very brief, and they are, they don't really, they shouldn't be used by themselves. Okay, and oftentimes there would be a lot of other factors before I go to that overbought, oversold condition. In fact, the overbought, oversold condition actually tells you that there is strong bullish momentum or bearish momentum. So it's actually, to me, a trending signal. Maybe not for the very near term, but for the short term, it is a trending signal. Okay, so that's all I have for you guys today. We looked at a lot of the US dollar crosses, some commodity currencies, gold, silver, and we looked at pound yen as a possible buy on the dip pair. But most of these currencies right now are dominated by US dollar strength. So we continue to look at the sell on a rally idea for euro dollar, pound dollar, etc. And so I have some questions here about the peso. Unfortunately, I don't look at the peso. I stick with the majors here. So for today's session, I'm not going to cover the peso. And if you guys have any other questions, any other pairs you want to look at, give me a signal here in the chat. Otherwise, I'm just going to maybe go through some of these charts, look at what's going on at the moment. Oh, here we go. We have another low here in the dollar yen. So like I said, there's some near-term momentum against the US dollar right now that we want to watch out for. But as soon as that is over, we can pounce on the dollar and buy the dollar. But for now, in the near term, let's see where this dollar correction takes us. Okay, let's take a look at the pound CAD. Not a pair I usually look at, but definitely we can do that. Let's see, major currencies. Why don't we just go through this? Okay. So here we have the pound and the Canadian dollar, which both are kind of soft against the US dollar, but we can see here in this daily chart that the Canadian dollar has kind of won the battle of 2014, right? This is a 2014 consolidation after a 2013 rally. Okay, and now since August, we have a reversal. We have price topping, and this is I'm glad you asked this question, Jasmine, or asked me to look at this chart, because this is a classic bearish slingshot pattern. Okay, it also has other elements that I usually use. For example, the RSI here. Throughout the year, we saw the RSI struggling to come back above 60. That shows you there's something wrong with the bullish momentum. Okay. Now the RSI here is broken below 40. Again, that also shows you something's wrong with the bullish momentum. There's the bullish momentum was basically lost and never reestablished. And here the RSI fell below 30, showing bearish momentum, and that's when price also fell to new 2014 lows. And then in September we had this rally, okay, this ABC correction, and the correction came back towards these common lows here, common support factors, right? Right around 1.81, 1.82, or 1.8150 to 1.82. This was also an area of the cluster of moving averages, 200, 150 day simple moving averages. Okay, and we have since seen the market retreat from that level. The RSI held below 60. So this is definitely looking at a bearish continuation scenario. Today's strong Canadian data is accelerating this decline. Okay, so we might expect some short-term support here around 1.7814. Okay, but if we have a rally from there, consider selling on a rally with bearish outlook at least towards the 1.7533, 1.76 level here. So this would be our target for now, and we know that potentially because of this bearish signal that the outlook could potentially come down towards the 174 common lows here. Okay, so there's a potential of a stronger target. Okay, so when you consider the reward to risk, we should first consider a conservative reward towards 1.76 and then the aggressive one towards 1.74. Alright, so that should wrap it up for today. I want to thank you guys for spending the time with me today, looking at the markets, looking at the way I look at the markets, and just trade safe, trade well. Don't fight the trend unless we at least get a week of data for the dollar crosses before we fight the trend. Okay, so that's it for today. Thanks again. See you guys next time. I think we'll have another one later on this month, right? At the end of October. I'll see you guys then again. Meanwhile, you can always follow up with me on forexminute.com. And let me just throw in the link over there. Alright, so that's it for today. Again, trade well, trade safe.